So today we're going to talk about a stock that is down 42% year to date, and if this could potentially be a stock that is at now an interesting buying point. And this stock actually got talked about a lot on the Discord recently, which you get access to if you join the Patreon. You join the Patreon, £5 a month, you get 2 exclusive videos a week and you get access to the Discord. And we on the Discord were talking about this stock and other stocks in this industry, because it's not just this stock. There's a few stocks in this area that are crashing big time, and we were looking, thinking, is there any opportunities here? And this one stock, I thought, you know what, I'm going to take a big look at it. So over the weekend, I had a look at it, thought, is this an opportunity to go buy? And I thought, what I'll do is all that kind of research that I did is share it with you guys, and hopefully you find this video helpful as well. So let's take a look at this stock and if it could potentially be a buying opportunity after a 42% crash on the stock this year. Let's get started. Now, just a quick shout out for all you guys that have been subscribing recently. I really appreciate it. We're very close to 16,000 subscribers. The subscribers are being hot at the moment, and if you are subscribed, thank you so much. If you're not subscribed, make sure you subscribe. Even if you watch the videos all the time and you haven't subscribed, make sure you do it, because we're closing on 16,000. If we can get there by the end of the month, I'll do a live Q&A session special on a Sunday to celebrate the 16,000 subscribers. So make sure you subscribe, guys. But let's get on to the stock, which is Dollar General. We're going to talk about Dollar General because this is having a tough time at the moment. 42% down year to date. In the last 6 months, it's down 49%. And if we zoom out, you can actually see it's actually been a pretty good performing stock. You look at the stock chart, it's been a really good performer, but the last kind of year, the stock has massively fallen down. It's down 67%. So let's look at this stock, and what was once a gem in the stock market, is it now an opportunity to go buy? Or is there actual concerns around this stock and that's why it's falling so much? Now, what's actually quite important to point out is it's not just Dollar General that's falling. If you look at another discount retailer like Five Below, for example, year to date that's down 60%. If you look at Dollar Tree, which is easy to get confused with between Dollar General and Dollar Tree, Dollar Tree is down 42% year to date. So we're seeing a lot of weakness in all these discount retailers. And I thought, okay, is there an opportunity in this space? And the one that I went with is Dollar General to have a look at. Now, it could be worth a video on Five Below, it could be worth a video on Dollar Tree. Let me know if it's worth a video on either of those stocks. But today I thought we'd do Dollar General because that's the one I actually researched over the weekend to see if I think it could be an opportunity to buy. And I'll share that with you guys today. So Dollar General, they have these stores in the US, obviously, that look a bit like this one, for example. And if you go in, a lot of consumable products, as you can see here, but they also do some other variety of products, which we'll get onto in a little bit. Historically, you know, we talked about the company. It's performed very well on a stock price, apart from like the last kind of 12, 18 months. Previous to that, it was a very good performing stock, as you can see here. Financially, very good performing stock. You can see here the growth has been pretty good. Revenue wise, the only dip in profitability really was during the whole kind of CV situation when a lot of stores were closed. Profitability wise, once again, very good growth from profitability. So they've got a good track history of delivering good financials. If you look at a PE at the moment, it's down at 12 times earnings. Historically, what does the stock normally trade at? It normally trades at 19 times earnings. So this is way off its historic valuation. So when you combine the historic performance and also it's discounted to its historic valuation, you can see it's also something to get a little bit interested about. As well as that, you would receive a 2.9% dividend yield, which would be nice to receive. So I started looking, thinking, okay, this is a little bit interesting. Let's dig in. Why is this stock dipping? So when we take a look at the stock, they recently reported earnings on the 29th of August. If we look at the 29th of August, the EPS was a miss, the revenue was a miss, and they also downgraded the guidance, which is obviously a triple miss, which isn't good to see. Now, looking at the company, it is still growing at 4% at the moment, which isn't that bad at the moment, but it is when you start digging in, there's probably a few concerns to be careful of. And what happened in the downgrade, as you can see here, is they downgrade the growth expectations, and also when you look at a profitability point of view, especially on the EPS, it was quite a decent downgrade on the EPS guidance, as you can see here. So why is this downgrade happening inside the business? Well, when we actually start digging into the financials, the big thing is to look inside the breakdown of the business. So like we said on the image of when we first walked in, you can see there's a lot of consumables that they sell, and that's the majority of what they make the revenue from. You can see it makes the biggest chunk of the revenue up. And actually, if you look at the business, it's actually still doing quite well. Like, that was up 6%. That is still doing quite well. The issue is when you look at the other breakdown of other parts of the business. Now, the other part of the business is seasonal, which was down 2%, home products, which was down 7%, and apparel, which was down 1.3%. Now, these three categories are smaller categories, but they were down. All the other three categories were down quite a bit. Now, why is this an issue when you have seasonal home products and apparel down this much? Well, consumables, okay, you get people in stores, they're normally, $1 for a product. They're quite cheap products and they don't make much profitability off a $1 product. With seasonal, whether that be like something like a wreath, for example, or something, maybe decoration related to Easter, Halloween, Christmas, or something summer related to like, barbecues or something like that. Home products as well is, chairs, desks, lamps, and apparel, t-shirts, for example. All of these products are a big difference because consumables are, $1 products. Seasonal home products in particular and apparel, these are big dollar products. They can charge a little bit more on them. Now, when you're charging a little bit more on them, for someone like a Dollar General, for example, they make more money on these products. And that is where the big issue comes, is that, yeah, it's good having that this growth is here, but this is where the big profit driver for them are, because they can charge more and they make more money off it. And that's where the issue kind of comes with this. And then when you start looking at gross margins, you can see here why there's a big decrease in the gross margins. The decrease in the gross margins was from 31.1% in the second quarter of 2023 down to 30%. And that's why we saw the big downgrade in the profitability side of it, where the growth is good, but the downgrade in the EPS is the concerning thing, because the items that they make most money on, they're not making as much money on it more, and that's the big issue. When your profit is dropping that much, that's where you don't have as much money to go do dividends, share buybacks, your valuation looks a little bit more expensive. That's the big concern that you have around it. Now, when we look at this impact here, why is this happening? Why is the consumables still doing very well, but why are we seeing the weakness here? So there's two things that I put it down to. The two things that I put it down to is, obviously, we've had the launch of Temu. Temu launched in America in the back end of 2022. And obviously 2024 is kind of where Temu's been ramping up. It's become the number one app in the US, for example. And when you look at like Temu, for example, like you can buy a lot of furniture products from Temu. So if you wanted to go buy some t-shirts, you can go buy some t-shirts from there. But if you wanted to go buy, let's say, something seasonal, like Halloween decorations, for example, you could go to Temu and they are dirt cheap, as you can see here. So as well as that, if you wanted some other things like other decorations, let's say you wanted a new lamp, for example, in your house, there's also other lamp options for your house, for example. And you look at the prices that you're able to buy off, for example, off Temu, it's a lot cheaper than the likes of even another cheap store, which is Dollar General. So Dollar General are having probably some competition, in my opinion, from Temu in this space. We don't know how much, but there's that impact going on at the moment. The other thing is, the consumer environment. Are people just generally out buying less? If you've got less money, you're going to maybe cut back from buying 2 t-shirts to 1 t-shirt. Are you going to think, actually, you know what, I was going to get a new lamp for my desk, but I'm going to leave it for now because I don't want to be paying, $5-10, and the one that I've got already works and I don't really need to upgrade it, even though I just think it looks a bit better. Is that the impact? So the big thing at the moment is their big, more money-maker categories are getting impact, and we don't know if that is Temu competition related, which the concern would be then that's something that's going to stay forever, or is it just a consumer weakness, which hopefully, if you stared at the numbers of home products and seasonal and you saw the improvement coming back, you would start thinking actually it's probably a bit of a consumer weakness part of it. But for me, I'm not sure. So that was the kind of little one concern that I had when I was looking at the business. The next thing I had was when I started looking at the balance sheet. So when I looked at the balance sheet here, what shocked me is to see what has happened in the last few years. Historically, the company wasn't too bad on a balance sheet point of view, and it went from about 2 billion in debt to 7 billion in debt. Like in 5 years, they had trebled the debt on the balance sheet, which is just crazy. It's in fact suicidal as a business, because what you have here is you have debt obligations that you have to start making, like when you have to pay back the debt, obviously in a higher interest rate environment, how much the debt is going to go up to those higher interest rates, and the profit that you have generated is obviously going down at the moment. They've gone from 2 billion down to 1 billion, and some of the higher end products aren't selling as well, which is an issue. You've got a dividend that you also have to pay out. You've got debt obligations that you have to meet. And right now, when you're in this environment, you probably think, well, hopefully they've got a clean balance sheet and at least they can, start buying back some of the stock. And they can't even do that because of the issue they have around paying dividend, the profitability falling, and they actually have a share buyback plan in place. But they've had to pause it. If you're having to pause it at the moment when your stock has gone from where it was at down this much, this is the time that you'd say you need to be buying the stock. But the problem is they can't buy the stock because they've got such a bad balance sheet to handle. And this is why maybe it'd be worth looking at maybe Five Below or Dollar Tree at some time, because maybe they have stronger balance sheets. But when I looked into Dollar General, that was the issue that I saw. So the two issues that I saw with this business is that we have competition potential, disruption, and it's not like an unrivaled business, as unrivaled investing would say. And that was my concern around, is this just a blip in the consumer, or do they have a general actual threat around the competition side of it with Temu? And also, can they at least take advantage of the situation? They can't take advantage of the situation because of the balance sheet. And for me, I looked at those two kind of issues and I was like, that would make me a bit nervous to buy. And actually, I then saw a video from this guy, which is a guy called The Patient Investor. I actually only came across this YouTube channel about a week ago when someone posted in the comment section. I posted a video on Ulta Beauty, and somebody put in the comment section saying, oh, your video is quite a lot like The Patient Investor. And I thought, you know what, I'll go have a look and see his video. And I thought, oh, this is actually quite close to what I was thinking around Ulta Beauty. It was a good video, and I subscribed to him, a really good YouTuber there. And he actually posted a video on Dollar General, and I thought I'll go watch it as well. And same again, he had the kind of the same concerns that I had around it, but he actually made a point that I didn't think of, and this I should have done, because this was such a simple but effective point when it comes to investing. And in that video, he went, so I can go buy Dollar General that has these concerns around the competition, the concerns around the balance sheet, which were the two things that I saw that I was worried about. And he actually added, I'm kind of copying the point here that he made in the video, but he said, I'm a shareholder of Ulta Beauty. I've started buying Ulta Beauty, which obviously was a video that I found, and he said, at the end of the day, why would I go buy Dollar General when I'm buying Ulta Beauty? And with Ulta Beauty, the growth story looks a lot more clearer, the competition doesn't look as big of an issue, and the thing is, Ulta Beauty, the difference between Dollar General and Ulta Beauty is that you've got a company here that has a clean balance sheet, and Ulta Beauty are able to throw loads of money into a share buyback right now, which Dollar General can't do. So I personally like Ulta Beauty better, and I think it's a better business, so why would I go buy Dollar General? And I watched that video from Patient Investor and went, that is so true. And then why you don't have to. The point of being a stock picker is that you don't buy every stock out there. You even don't have to buy every stock that you like out there. The job as a stock picker is to buy what you think is the best of the best. And there's plenty of times that you'll see stocks that you like, but if it's not the best of the best, you don't buy it. And if I look at Dollar General and I compare it to Ulta Beauty, I think if Dollar General sort out some of these issues out, that it could do very well. But will it do as well as an Ulta Beauty? And I don't think so. And same goes down to like another consumer product, which obviously the other risk as well with like a company like this is obviously the consumer element. Obviously buying consumer stocks are quite a risky business. The trends can move very quickly, and that's the other issue that you have with a consumer business. But another one, another consumer business that I'm buying on the weakness is Lululemon. And same with Lululemon. You got a historic lower valuation, the profitability they're making is a lot more, great balance sheet, they're buying back a ton of shares, and in this time frame when all this weakness is happening, this is still a company growing at good rates, 7% profit growth, 15% income growth. So it came back to the point of like, what's the point of buying a stock like Dollar General if you've got concerns around the business? Is the business now being disrupted? The balance sheet's an issue. Why go buy a company like that? If you think that you've already got two winners in Ulta Beauty and Lululemon, you might as well just carry on buying those two stocks if they continue and they're in the consumer weakness environment. And I thought that is such a good point. So shout out to Patient Investor who mentioned that. And that was my thoughts when I looked at Dollar General, is that I actually think this company could do well. It's historically proven to do well. You look at the stores that are going to increase, the valuations at a discounted rate, you look at the issue that they have, it could maybe be resolved, but I thought, you got a few things that aren't as good as a Lululemon or an Ulta Beauty, and in my opinion, as an individual stock picker, you've got to buy the best in those sort of spaces. And when I look at the consumer environment at the moment, and there's a lot of stocks that are getting affected by it, when I weigh up something like a Dollar General to two that I do own in a consumer environment like Ulta Beauty and Lululemon, I think they're slightly better. So why put money into there when I could use that money that if Ulta drops anymore or if Lulu drops anymore, I go buy more shares in them. And I thought that is a great point, and that was my thoughts on Dollar General anyway. But that's video for today. Like I said, I don't know if you want to see one on Five Below or Dollar Tree as well. Let me know what your thoughts are on that. But that's what I got up to on the weekend when I was looking at stocks, and I thought I'd share it with you guys, because I know some of you guys, that's why I started the YouTube channel. That's why I started the YouTube channel, like 7 or 8 years ago, because originally I just researched stocks and then I'd put it on the internet, and hopefully it's someone that was maybe looking at the stock would find the information that I researched helpful, and it might help them. And I thought, you know what, I've spent 2 hours, 3 hours on the weekend on Saturday or Sunday looking at Dollar General, and I thought I'd put it on here for you guys, and if it's helpful for any of you. Anyway, hit the like button if you're new around here, or you've been a long-term watcher but you're not subscribed. Make sure you subscribe, guys. We're closing on the 16,000 subs. Apart from that, I'll see you in a bit.